Stop filled.
All right, that took me out right there. Guys, just went live here. We had a losing trade earlier. Now I'm just sim trading this morning. I'm not in this live. I don't usually trade live on Fridays. Kind of go in and talk to our regular audience on our Discord on Fridays. Have a squeeze right here. We're kind of extended on the short side here with the lower B4 indicator. We typically look at that on the ES with our B4 210 bars. Unirenko style bars there. With our footprint chart here, we'll usually look at that at about a -3 and a +3. Look for our pullback area here in this white zone right here. So if we pull back and have continuations, we kind of see that happening here. So we use that to our advantage when we're taking our trades. This was a measured move, and Walshy, one of our guys here, rightly called it so, with the cheek out trail principle that we've been teaching in the live trading room. Walshy's getting really good at that stuff, but he called it right here. According to this right here, this pattern right here, some of you may know it as a broadening formation or a megaphone pattern. This is our take profit 1. We got another standard deviation down here with a take profit 2. That is at about 6, just call it roughly 63.33 for easy figuring, as a target potential. Doing this as a breakout from this Y pattern, which wedge, Ichimoku Y pattern. Got a potential target here and here. Basically breaking that range there into 2 pieces. That's why I got a midpoint on my line here. When it breaks at the break point, line it up. There's your 2 targets. In that regard, we came down and touched it basically to the penny, tapped it. Time to guard, figure out what you're going to do, and if we break again, we can get a potential run to here. I'm going to put it on buy green, sell red. We got some potential pullback here.
Order filled.
Let's see what it's going to do. Still got that pullback potential here. Don't necessarily like this. I'm going to tighten my risk on that, tighten my parameters on that. I don't want to, even though I'm just paper trading this morning, I still don't want to expose myself to that much risk. That's what I would do in a live situation.
Yeah, because the cheek out is just way too far away from the candles. Because then let's see, 1, 2, 3 candles. It may pull back up a little bit. price that.
That's right. We count candles a lot here. Typically an average run, guys. If you're looking for an average run, let's say a 3-minute chart or whatever minute chart you have, if it's time aggregated, typically get about a 5 candle run for the big move, for the average move. An average pullback is about 3 candles, and a typical push, just a hard push, is about a 9 candle run. We made it to Walsh's measured move here, and that was just using some principles with the Chicow Trail. It's one of my favorite principles, one of the things that I do day in and day out here. And so we were looking for a touch point right here where we touched down at. Now we're testing the waters again, seeing if we're going to break that and go to our second target, which is here. Now my show you dots are moving for me. You don't see that on my chart. I have a show you indicator on a reference chart here, another chart. It is a 3-minute chart time frame, and my kiss dots are about to fire, so I need to exercise some caution here, Walshy. Well, I got 2 more candles till my kiss dots fire. My show you dots are walking down. When my show you is moving, the status quo has changed. It's time for me to reassess my risk parameters. When I'm in a position and the show you dots are moving for me, I usually start guarding. Whenever I'm in a position and the show you dots go against me, I start mitigating risk. I start tightening up the stop loss. Oh no. Now a lot of people say, well, whenever you originally get into a trade, you got to assume that risk and that trade your initial decision and get it grounded solid and move forward like that with a successful rate. I totally understand what they're saying. I totally get it. I don't argue that for the average trader. But the average trader doesn't have my show you dots.
Stub filled.
And I see things in that show you that the average trader talking that, and I agree with them for their individual position. I agree with them. That's what they should do. I don't do that. I have another piece of information here that helps me make a better decision. That's our R1 and that's our TP2 with our pattern. I have a, you don't see here, maybe I'll put a screenshot. Let me do that. Can I put a screenshot? Let me take a screenshot. Boom.
When you see those dots move, the way it was dropping the Tinkinson forecast lines, where it really was almost vertical down. Do you go off of the cloud forecast dots or the Tinkinson?
Tinkinson and Keatonson are, so which ones are relevant to price action right now, Walsh?
I'm going to say both, but
Okay, the Tinkinson and the Keatonson, correct. So if we look at it, Chicow is our history. Tinkinson and Keatonson is right now. And the ones on the cloud are future. Now, I'm mainly looking at the Tinkinson and Keatonson, how those show you dots are moving. However, whenever they get aggressive, sometimes the cloud show you dots move as well. But the first thing I'm looking at is relative where we are right now, dynamically, with those show you dots with the Tinkinson and Kijinsen.
Yeah, because the show you dots for the Tinkinson was just, it was aggressive down.
It was very aggressive down. That made
an aggressive move.
Yep, it was an aggressive move. It was a volatility spike. Now we're at support. If we make it to the top of this candle, pushing up, I'm saying that we got some breath. But if we break even this little bit, I must say it can get aggressive to the downside. That's why I'm going to go ahead and do a buy green and sell red here. Now I know that I am extended to the downside here, but I'm at a 2.72, somewhere in there. So I still got some meat on the bone to the downside. You know, here is our L2 profile. They got a buyer possibly here. Like I said, if it gets moving up and gets over the depth of that candle there above here, I'm all right to buy in, because I don't have a virgin point of control. Well, I got a VPOC right there. It'd probably be right at the edge of that VPOC, and the target would be this next one. So if I was placing a resting order, I would place it above this VPOC, thinking we can make it to this next one. Or I would, if we made it up there and things looked like it was going, I would put that as a continuation and put a resting order under it to catch the downfall. But that is a new feature too with our footprint. Zoom in so you can see it a little bit. We got our VPOCs here. Our virgin points of control. These are our most critical areas in volume. We're looking at, a lot of people, they use the volume is very critical in the market. It is. I don't downplay it. I used to not talk as well about it because people were talking volume at time. Everybody's talking about volume at time. Volume at time doesn't do anything for me. I could look at the candle. I see the candle. Why do I need to see it here? I see the candle. That does nothing for me. However, volume at price, you turn this thing on its side and you start noticing the volume that's traded at price. Now you got good information. Now you're looking at some of the most critical information you can look at. Volume at time, I can see that in the candle. Volume at price, now I'm painting a picture. It's time for our kiss dice to start firing, Walshy. There it is on this candle.
Order filled.
Now, those of you who are not regular members here, you've probably never seen our KISS indicator. I took a screenshot. Let me take another screenshot. I didn't post that screenshot a while ago. I got to talking once. Now I can take that, put that in our Yeah, if I put it in this chat, I'm gonna lose it. I put it in the general though. I put in the general channel. I'm gonna post. I'm gonna post this in the general channel. Is that the right one? Yeah, let me say something. This is my new. Work in progress. But you can see our targets. Let me send that to that go. You can see our targets there on my little PNY. I put that in the general channel. I put a chat there. We got our kiss dot firing on the bottom of that candle there. You'll see that. That tells me the price is about typically going to pull up and come up and kiss the Tenkan-sen. Now the Tenkan-sen is kind of lined up with where we are right here. So it's tight. It may just reject from here. So we may not have a good trade. If it starts rejecting from here, comes up, touches that and rejects, I'm going to tighten up my risk. In fact, I'll probably tighten it up right now. Because we're at a position where it could come up, just touch that, reject, and start continuing back to the downside. There was a time about 2.5 years ago where the market was real tight. And that's why I discovered this. Ichimoku principle. And I saw solid edge in it. And I wasn't having many trades, opportunities. So I seized those. I loaded the wagon, took very aggressive trades, very tight stop losses, and I was catching 3 trades. I was catching 4 trades. The initial move, the pullback, the return, catching 3 trades in it. And that's how I had to eat, how I had to survive. Was very accurate, and later my coding skills got a little bit better, and I decided I was going to try to code the kiss dots. And I'm still new to coding. I still struggle with it a little bit. I sit there and watch. I showed Barb something of mine the other day, and he went in, started doing something. I'm just blown away. I'm sitting there watching him, and I'm just jaw on the floor. He's doing all this stuff, and I'm, oh my goodness. It's like when I first talked to Barb, and I was going to talk to him about trading. I was going to teach him something. Man, he's a genius. All right, what we're looking at here, guys. We're looking at some possible bullish potential here. don't really have a lot of solid edge in this move right here, so I'm just out of it right now. We need to make up our mind where we're going here. We came down to my TP2 to the penny with my little new little indicator there. Now, whether it's going to continue going down, I can't say. But if we break the 62.32, wait a minute, what is it at? $63.31.50. If we break that, that's our last kiss dot. If we break below that, we can re-enter the trade bearish.
Order filled.
In fact, the system's going to do that for us. Let's see how this trade turns out here. Sorry guys, I am multitasking. Let me get off of that, start paying attention to where we are here. I am not, by the way, I am not live this morning. I am just simming this. We had already touched our Tinkins in here, so this could be extend out a little bit here and continue pushing. It still has a chance to pull back in on us though, so I need to monitor it a little bit. We get back down in profit here. I'm probably going to guard it. Because I could take some drawdown on this one. In fact, I'm gonna guard it tight here because I just want, if it breaks me even, I'd rather be broke even than broke. When I say break even, I'm talking about here for the session. It is a little iffy on this trade.
Stub filled.
Yeah, broke even's better than broke. That's gonna be a new it's gonna be a new trading lingo for me. I'm a coin now. That is at our R1 level here with our algo. Guys, every day we have a roadmap, an advantage with our system with these beautiful levels. We already have that laid out for us before we ever start trading. Still thinking we're going to come back, touch the Tinkinson. You don't see the Tinkinson on this chart. It's somewhere around here. Thinking we're going to get a test of this trend line and a rejection. Possibly. I'm still bearish overall, Ichimoku wise. However, let's look at the cheek out trail right now. This is a principle I teach. I know my chart's messy right now. This was our consolidation box. This is Chicow moving. What we're looking at right now is a possibility. Notice how this is down and sideways and down right here. Price. That's what I'm expecting price to do right now until it gets closer to these candles, and then possibly take a hard turn down whenever it gets closer to this momentum candle here. So I'm expecting a little bit of sideways activity, and unless we break below this dot here. If we can break below this dot here, then I'll say that we have opportunity to the downside. And that's here. We got a measured move here. We measured that initial move here to take profits here. And then we got another one down here. If we get down below here, we got an opportunity from here to here. We got an opportunity right up in there. That's how we use our KISS dots. If you look at our KISS dots and go back and look at them, you'll see that they are at turning points. Now, this one right here, there's a situation with the Kijinson and the Tinkinson we look out for whenever they're paired, turning up, when we know that they can be broken. That's the case that happened here. Turning point. Again, Tinkinson and Kijinson facing upwards in an upward motion here. When it happened, it pushed through. Turning point. What these are is for price to typically come back, and we expect price to come back and touch the Tinkinson. Let me look at that a little bit. So there's a TK cross. We expect price to come back, touch the Tinkinson, continue. Right here, we expect price to come back, touch the Kijinson, and then decide which side of the fence are we on. Are we on the above the Kijinson or below the Kijinson? Again, it crossed over the Kijinson, we go bullish. Possibility for it to come back and touch the Tinkinson, but if the Tinkinson and Kijinson are pushing forward, it's going to push aggressively, and it did. We use this for risk management and for positioning of our stop losses with our trades. This right here, we know not to go short unless we break here. If we break here, we can go short again. If not, if we get above the Tinkinson here, we know that we got a target to the Keysonson. It's how we use our KISS dots in trading. So I could place a resting order below here. Buyers in the market right now. It's really a battleground right here. Check-out trail. What do we expect? Look right here above the check-out. It's sideways chopping motion, angling down. So I'm expecting some possible sideways chopping motion, angling down. If that happens, and I'm just putting this out here ahead of time, it'll give us another wedge pattern, or you may know it as a flag or whatever. Pendant.
Order filled.
Again, guys, I'm just simulated this morning. I'm not live. I'm not connected to anything. I don't trade on Fridays typically. We go back and look at historically what our strategies typically do, and they seem to do worse on Fridays, the expiration of options. Now my Kyushu, which you don't see on any of these charts, it's on my supplementary chart here, has rolled over to the it's in a transition period right now. We got like a no Kyushu that fired, and my first bullish Kyushu leg has transpired, has come into play. Doesn't necessarily mean anything right now until we get over it, until price goes over 337.50. Doesn't really mean anything until we break over that. But this is a little up, this is a risky little setup here. It is on the right side of my Kyushu, of my Shoyu dots, my KISS dots, sorry. It is on the right side of my KISS dots, so I like that. It does have our reversal signal firing from our algo. Just need to get a little wind behind it. Again, that wasn't a signal from my system, from our CoPilot. That was a discretionary entry. We're right at the Tinkinson. And all we're really promised with the KISS dots is, well, not promised, but all we're really looking for is a touch at the Tinkinson. So this may be a little iffy little trade here. That Tinkinson is dynamic support and resistance. I'll give it a little bit of the room here required. If it does work out, I expect it to possibly go back to a TP1, which I took a shot of that and put it in the general channel at 63.37.50. So if there is an opportunity for me to lock in on this trade, I'll lock in on it. Again, guys, I am only simulated this morning. If you're going to trade, you have to trade at your own risks. Everything we're doing is for educational purposes only. This is a possible turning point. I don't necessarily like this trade this much. I'm looking at the Chicow, how it's lining up with this lower point here. This is a possible turning point to the downside. Right here, I'm focusing on this right here, this pivot. Your turning points line up with your Chicow, with your previous pivots. I'm thinking it can either suck up in here in the nook, and then reject, possibly. Or it can break here and break hard, break out here. Have a potential move. All right, I'm going to tighten this up.
Order submitted. Stop filled. Order filled. Order submitted.
Because again, I'm just in paper today. We're in a squeeze on a 3-minute chart at the bottom of a run. Guys, right here, 2,500 or so. That's where I want to shut it
Stop
down. I don't
filled.
want to go any deeper than that.
Order canceled.
Putting together a better risk plan for me this year, or going forward from this point this year. I don't want to ever lose more than about $2,500 if I go in the negative.
Order submitted.
So that would mean shutting down
Order canceled.
for the day here.
Order submitted.
If I was actually hooked up live here.
Order canceled. Order filled.
Not the best trading environment right here. Now, I am just sim trading here, guys, so you have to trade at your own risks. I'm thinking this is going to start turning on us. Right at the zero line, it may be the pullback and the continuation to the downside. I have to wait and see here. Alright, it's working to the bears.
Order submitted.
No, we're gonna do the bullish. It's got
Order
a bullish
canceled.
3-minute on the B4. A lot of discretionary moves this morning. We only had 2, I think it was, trades from the CoPilot Pro that I think one was bad, one was good. The first one was a loser. Second one was a winner. Everything else has been pretty much discretionary. It's 10:15. At about 11 o'clock, I'll have to go no matter what. Just not a trending market right now. It's not a time to be trading. Lower B4 showing a little bit of a starting to broaden out there with the volatility bands. We're on the bullish side after a squeeze. Got a little upside potential here. Kyushu has been rolling back and forth, red, bulls and bears, so it's been choppy. So we've been in a transition period. We may get into some, hopefully, if it's in this position, some bullish movement back to VWAP. All right, that would have got us in automatically there with our system. That's one of our signals. I'll usually have to do it on a day like today if I'm down, is I'll stop trading whenever we're doing like this and come back later around after lunchtime and try to see if the market straightened itself out, started trending a little bit, and if it has, I'll get back in. Right now it's just not moving, it's moving sideways. Like we said, we looked at the cheek-out trail earlier, and we said there's a possibility, just looking right here, looking above the cheek-out, of that just chopping and grinding. And that's what we're doing, we're chopping and grinding. We're in 1, 2, 3, and about 4 candles, 3, 6, 9. We have an opportunity for it to start moving again. I'm thinking it's going to move to the downside.
Order submitted.
So that may have pulled up, gave it time to get recalibrated. Cheek-out trail looks like it could go down. If we get below that Tinkinson on a 3-minute chart, I don't have that up here. I guess I do have it here. If we get below that Tinkinson on the 3-minute chart, I'm saying we can go down again. We got this support here. If we break that line, it could be some good movement. That's 3 touches of it right there. 1, 2, 3. If we break it, it could be a good move. And that would line up with the cheek out trail to be an aggressive move to the downside. So if it breaks that trend line, it could get hot and heavy. But right now we're just kind of drifting. My second set of KISS dots is firing. It's time for it to touch the Kijinsen. Only problem is the Kijinsen's down there low. It's not very high. I'm going to clean some of these drawings off my chart here. Kagyushu finally fired a bullish signal.
Order canceled.
Again, guys, I am just simulated trading today. I'm not live. We can make it up to here.
Order submitted. Order filled.
Chicow is in the candles here, so it's a little risky. We're breaking out of our squeeze box, which is basically my consolidation box. They're almost the same. Identically. I know I'm tight.
Kind of the observation that I've made, Chuck, is I guess I didn't notice this until yesterday and today.
Okay.
Is that if the Chicow is below the candles, the Chicow trail works opposite to what you would expect.
Opposite to what you expect.
In terms of the candles.
Yes.
And if it's above the candles, it moves in concert. The Chicow trail moves in the direction of the candle.
I noticed that probably about 4.5 years ago, Walshy, studying.
And one,
Order filled.
I guess in all of our discussions on this, I never quite
things start
saw that nuance, but I'm seeing it very clearly over the last couple of days.
Things start clicking, Walshy, and you start building layer after layer after layer. Yeah. Just sitting there.
I have to just take a quick call here, Chuck, but I will be back in 15 minutes.
Okay. Yeah, I probably will be, but I'm going to go at 11 o'clock. It just takes chart time looking at it, Walshy.
Yeah, it's very very powerful.
It is very powerful. I don't have a trading name,
Order
but
canceled.
if I ever did one, it'd be Cheek Out Chuck. Yes, sir. I love my cheek out. Now, the cheek out is right now, Walshy, in the candle, so it's iffy. And then we got a resistance right here and our brackets right there. So we still got some room here, but we still got VWAP ahead. So it's time to recalibrate and rethink everything right now. Anyway, I know you got to go.
Order submitted. Order submitted. Order canceled. Order canceled. Order canceled. Order submitted. Order submitted.
Again, guys, everything I'm doing this morning is simulated as for education only. Don't trade on Fridays, typically. Unless we just got a nice trending day.